SoFi reported quarterly results before the bell. The online loan lender reported a smaller loss than analysts expected and said it still expects to be profitable this year, even amid the wider contagion from bank failures. Joining us in studio to discuss is Anthony Soto, SoFi CEO. Thank you so much for joining us on Yahoo Finance today. So first, I want to get your big takeaways here. I mean, when we look at especially the personal loan origination volumes shooting up 46% in the quarter, how was SoFi able to insulate itself better than some other banks?
Yeah, this is our 8th consecutive record revenue quarter in a row. And that's a reflection of the diversity of our business, not being overly dependent on any one product or service. Because we're a digital one-stop shop, we're helping people get their money right across a variety of different products. And in different environments, such as high interest rate and a slowing economy, we have products that can do well. Similarly, in a lower rate environment and a faster economy, we have other products. And so over the last 2 years, we've been able to operate in that wide spectrum of economic backdrops to deliver consistent results. In fact, record results 8 quarters in a row. So it reflects not just our lending products, but also our technology platform segment and our financial services segment, which is less dependent on credit. So within that segment, we have checking and savings, we have brokerage, we have insurance, we also have partnerships that generate lead revenue. So the inherent diversification is what's allowing us to operate in both of these environments and continue to have a very favorable outlook in terms of overall growth of the company.
And as a lot of us are sort of passing through wondering where a lot of these deposits went in the fallout from SVB and Signature Bank. I mean, looking at your deposits, they're increasing by $2.7 billion sequentially, another record there. How much do you think SoFi benefited from what we saw with the collapse of those banks?
We would have had a really strong quarter for deposits, even without the issues that took place. We were well on our way to over $2.3 billion of deposits before the events unfolded in April 9th, 10th time period, similar to what we've seen in the prior quarters. So I'd say a portion of what is reported today is likely due to people looking for safer, more well-trusted banks and banking relationships. So without a doubt, we are one of the more trusted brands. Our brand awareness continues to grow and continue to become a household brand name. In addition to the fact that we're a national bank license company that can offer $250,000 directly at SoFi, but an additional $2 million of FDIC insurance through a partnership. So that attracted some dollars, but we would have been well over $2 billion had nothing happened in April. And we see similar trends continuing.
And what are some of the questions that clients have for you as they do wonder about contagion?
People want to understand what's happening with student loan refinancing business. We grew that quite meaningfully from about $400 million of volume in Q4 to over $500 million of volume in Q1. We stole significant market share. That reflects our ability to provide a better interest rate on loans than our competitors. And so we're seeing growth there despite the fact that the student loan moratorium is still in place. Our brokerage business is contributing and continuing to scale very nicely, as well as our credit card. Our technology platform had strong double-digit growth, and we've started to focus on bigger, larger customers that are more durable. And so that's also contributing to the growth. And so they just want to make sure that we have things driving the business beyond just credit.
And how are you prioritizing some of these investments in technology, since that is such a critical part of the business?
Without technology, SoFi wouldn't exist. So it's a core part of everything that we do. It's a large percentage of our investments each quarter. It's a large percentage of our employees. Our ability to continue to drive innovation, to continue to become a trusted household brand name, to continue to drive the selection we have across all of our products is a direct result of our technology investment. We're helping members buy better with our checking and savings account, as well as our credit card. We're helping them save better with 4.2% interest on savings and over 1% on checking. We're helping them invest better with SoFi Invest, where you can buy single stocks without commissions, fractional shares, SoFi robo accounts, SoFi ETFs, as well as cryptocurrency. In addition to that, you can buy home, auto, and life insurance. And then, of course, you can buy a home using our mortgage product or refinance your mortgage through our mortgage product. So pretty wide diversification of products and services depending on your needs.
And as we also have a lot of non-banks, expanding their reach in this space, obviously Apple and others as well, how does SoFi position itself to really stay ahead of the game here, especially when it comes to personal lending, something that we might see some of these big tech companies step into as well?
Sure. Because we have such a broad portfolio of products in our product suite, we can be more competitive on attractive rates, better services, better selection than others because we have more economics and lifetime value than our key competitors or new entrants to the marketplace. And so we try to differentiate each product on fast selection, content, and convenience. And then uniquely, we want our products to work better when they're used together. Other companies are singly focused on one product or two products, so they can't leverage that better together strategy the way that we can, and it's a key differentiator.
I do appreciate you joining us this morning on Yahoo Finance. Anthony Soto, SoFi CEO, thank you for your time.